Hello, beautiful people, and welcome to another brand new edition of the ITU Forex class. In this week's edition of the class, we're actually going to be talking about the secrets to consistent profitable Forex trading. Okay, so without wasting any more of your precious time, let's dive right into it. Okay, so first things first. Before we are going to be talking about the secrets of consistently profitable forex trading, you actually need to understand what consistent profitability in forex trading actually means. Okay, so what do I mean when I say this? Let's quickly go to the whiteboard so that I can show you this. Okay, so let's assume you're trading a trading strategy which you've back tested, you've forward tested, and you found the the stats for that particular trading strategy, and you actually found that that trading strategy has an edge in the markets, so it's profitable. Now, just because the trading strategy is profitable, that does not mean that the trading strategy is going to give you profits like a regular salary job is going to give you. So, for example, assuming you're actually working, you're employed, for example, with a bank. Let's use a bank as an example. Okay, so let's assume you're working as a manager in a bank or whatever the case might be. So in your contract, in your employment contract, or whatever the case might be with the documents you got signed up with, it's going to be stated how much you're going to be paid each and every month. So maybe, they're going to do a breakdown with your allowances, your costs, your everything, it's going to be there. But then at the end of the day, when all is said and done, you're going to have a take home pay figure. So let's assume that amount, okay, let's assume that amount is 100,000. This is just an example, okay? So let's assume that amount is 100,000, okay? Now, if that's what you're earning, or let's say 120, just to make it easy, okay? Let's make the maths easy, okay? So let's say 120,000. Now, let's say this is your take-home pay per year, annually, okay? Per year. Now, when we break it down to monthly, this is going to make it that you're taking $10,000, okay? $10,000 each and every month, okay? Let's say this is your take-home pay at the end of every month. Now, the thing with this is, since it's a monthly salary, if you do your part and you come to the job and you do what you're expected to do, that particular salary is going to be fixed and it's going to be paid to you each and every month. 10,000 without any glitches, okay? Assuming nothing bad happens. But with trading, the income from trading is not like this. It's not this stable. It's not this linear. What I mean by it's not this stable, it's not this linear is with trading, there could be months that you make, let's say, let me just use this as an example, okay? This bar chart's representing the money you are making from your trading each and every month, okay? So let's say these are the data, and then here and here and here and all of this, okay? You'll understand exactly what I'm trying to get to in a couple of minutes, okay? So let's say with trading, your trading strategy, let's say the first month you traded, it made a 2% profit. This is 2%. The bar charts are representing the profits and losses for each and every month, okay? So this is 1 month. It made 2% in profits. The next month, let's say it made 3%. The month after that, let's say it made a profit of 1.8%, okay? But then the month after that, you didn't actually make any money. In fact, you lost money. So your account was like minus 1%, okay? Minus 1%. It was in drawdown. And then the month after that, let's say you make a profit of 1%, okay? And then the month after that, you make a loss of around minus 2%, for example. Now, what I just showed you here is a typical example of what a trading income looks like, okay? So when you hear traders telling you that, they're making X amount per month or whatever the case might be, if they are not trying to deceive you or lie or blatantly outright lie to you, then they're going to tell you that figure that they're telling you they make per month is an average. So what I mean by it's an average, this simply means that you're taking the average monthly returns you're making from both winning and losing months, and then you're averaging that amount to get a number, which is what you make on a month on average, okay? So a trader could tell you that based on the account he's trading, for example, let's say he's trading a $100,000 account, or just to make the example, easy to understand, let's just say he tells you that he's making $10,000 per month. Okay, so this could mean that this does not mean, from a trader standpoint, remember we talked about the salary standpoint. When the normal, regular salary earner tells you that he's earning $10,000 per month, this would mean that if his job is anything like the traditional job that we have, each and every month, as long as he does what he's expected to do, he's going to get paid $10,000. But when a trader tells you that he makes $10,000 per month, that does not mean that each and every single month he's making $10,000. There are months that he could make $10,000. There are months that he's going to make more than $10,000, depending on his account size. And there are months where he could be in drawdown. He could lose the same amount. Or maybe he would just be at break even. He didn't even make any much profits. Okay? This is the reality of trading. And the painful thing about this is, I remember from my own journey and a lot of traders that I actually work with, most people, when they get introduced to the Forex industry, this particular truth, this harsh reality about trading is not being told to them. So most of the times you'd hear traders telling them, make X amount per day or make X amount per month. And they feel, trading is like a regular job where every single month, every single day or whatever, if you do A, B, and C or whatever the case might be, you're actually going to make a consistent amount. That's a big lie. That's one of the industry's biggest lie. This is not, it doesn't happen like this. It doesn't exist like this. Okay? Trading income is not stable. And this is one of the reasons why I keep telling traders who tell me that they want to quit their job for trading. I tell them that they should know that the reality of trading is that they are not guaranteed to make any amount of money per month. So if you are relying on, for example, you quit a stable job, which guarantees you a steady monthly paycheck or a steady monthly income, and you want to dedicate your time and effort and whatever to trading, know it at the back of your mind that if you have monthly bills to pay, trading does not care about that, because there are months where trading will give you absolutely nothing. And if you have bills to pay, then you're going to be in a very tough spot. So you need to understand this. And if you're okay with the reality of this, then you be my guest, you could trade for a living. But if you're not, then you should know that trading as a part-time job or as a part-time side hustle or whatever you want to look at it as, and then having your regular job, which gives you a steady income, is a very wise idea. Because when you split it that way, your regular job is going to help you with a consistent income, reliable income, which is going to take care of your bills, your month-to-month bills and whatever. And then trading, you're going to use trading as a vehicle to actually build your wealth. So what I mean is, if you're getting money from your regular job, which you're using to pay your bills and, save a little, invest into your trading account and all of that, then you're not going to be pressured to make money from trading. So if you're doing what you're supposed to do, which is doing proper risk management, following your trading plan, doing all of these things that you're supposed to do, even if it so happens, and this happens very often, that your trading strategy, this month was just not a good month for your trading strategy, that's not a problem, because even if you don't make money from your, trading this particular month because your trading strategy, the market conditions were not favoring it, you're not pressured, to pay the bills and whatever through your trading income. So that's one way to look at it, okay? So if you want to go trading full-time, at least have an emergency fund. Something like, enough money to cover like 12 months of your monthly expenses. Okay? If you insist that you want to quit your job and, go into trading full time, then at least make sure that you have an emergency fund of like 12 months to cover your, month to month expenses. Because like I keep telling you, the income from trading is not the same as the income from a stable job. There are months where you're going to get, tremendous amount of profits beyond your imaginations. And there are months that you're going to be down. There are months that you're going to be at break even. You won't even make anything. Okay, so if you're relying on your trading income to actually, give you what you need to pay for your bills and all of that, you're going to be, you're going to be in a very tough spot. This is the first secret. Okay, now the second secret, and this is one a lot of traders tend to overlook, is the fact that trading in and of itself is a game of probabilities. So if you remember, like I told you, the income from your trading is not like a stable income from a salary job, okay? The thing is, depending on the trading strategy you're using, there are months where you're going to get, tremendous amount of profits. So if for example, you're trading with a trend trading strategy and the market happens to be trending, which means it's favoring your type of trading approach, then guess what's going to happen? You're actually going to be in a very good spot because you're going to be making a hell of a lot of profits because the market is agreeing with what your trading approach, okay? But let's say you're a trend trader, and it so happens that the market is not trending, just like what we have on the chart somewhere here, okay? So just look at what we are having right now, okay? So if you take a close look at the charts, you'd see that this particular currency pair, this is the daily time frame, mind you. So this is telling you that this particular pair has been in the trading range for a very long time right now. It's about a couple of months. Let's say, a couple of months. It's been in a trading range. So if you're a trend trader, trading this particular period would be brutal, absolutely brutal, because if for whatever reason your trading strategy gives you signals, because the market is not consistently trending, it's not making higher highs and higher lows, it's stuck in between these levels of horizontal support and resistance, then you're going to take a lot of losing trades. A lot of the trades that you take are going to hit stop loss. Now, the thing is, in and of itself, that's not a bad thing, because if you know that, then you can counteract that by doing something which is going to protect you against that. And this brings me to the crux of what the second secret is. The second secret is you should trade multiple trading strategies that complement each other. So what do I mean by this? You see, if you're trading with a trading strategy which performs at its best when the market is trending, that means, for example, when the market is making lower lows and lower highs, just like we're seeing here, lower lows and lower highs consistently, this means your trend trading strategy is going to be in a very good position to take advantage of this trend. But then, because you know that the flaw of your trend trading strategy is that when the market stops trending and it starts ranging, it's going to find it difficult to continue bringing in those profits. In fact, it's going to be giving back a lot of the profits that it made when the market was trending, because now you're going to be taking a lot of losing trades. Then you need to complement this trading strategy with a range-bound trading strategy. What is a range-bound trading strategy? A range-bound trading strategy is simply a range trading strategy which gives you signals when the market is stuck in between levels of horizontal support and resistance. For example, let's say that a support and resistance trading strategy. So obviously, you can see that price is struggling to break above this resistance and it's struggling to break below this support. So for that type of trading strategy, whenever price bumps into support, you're going to take a long trade, capitalizing on the fact that price is likely going to hold in between this range, okay? And so you take the trade here, aim for a profit close to the top of the range. And then when price reaches the top of the range, you take another short trade here after closing your long trade and aim for a profit at the bottom of the range. And so you're going to consistently keep doing this until the moment when price breaks above or below the resistance area. And so by then, the market would have stopped ranging and now it is trending once again. So in this situation, because these two trading strategies are inherently different, when one is performing well, the other is likely going to be struggling. So when the market is trending, your range-bound trading strategy is likely going to have a difficult time because it performs at its best when the market is ranging. And so when the market is trending, your trend trading strategy is going to be giving you good amount of profits, but your range trading strategy is likely going to be taking losses. And then when the market is ranging, your range trading strategy is going to be giving you good amount of profits, while your trend trading strategy is likely going to be encountering losses. As a result of this, when you combine these two trading strategies into one portfolio, this would mean that there's a higher probability that when one strategy is having a losing month, the other strategy is going to be likely having a winning month. And so the losses or the drawdown is going to be reduced. The effect of the drawdown, the negative effects of the drawdown is likely going to be reduced. Okay? So what does this have to do with anything? Well, the simple thing here is that, remember when I told you that it's not uncommon for a trading strategy to have months where it makes a tremendous amount of profits, and for months where it barely breaks even, or months where it's in losing. This is because most times, if you're trading only a single trading strategy which capitalizes on a single type of market condition. So, for example, when the market is trending, just like we had here, and let's say you're only trading with a trend trading strategy, then you're going to be having positive months here, as long as your trading strategy was built in such a way to capitalize on this trend. But then when the market starts ranging, again, it's going to start struggling. And so you're going to have maybe much less profits per month, or maybe even you're going to have losing months. But then what about your range trading strategy? When the market is trending, your range trading strategy is likely going to be having losing months. But then when the market starts ranging, it's actually going to start having profitable months. So when you combine these two trading strategies together, you're actually going to reduce your risk, your exposure of getting into drawdown on a monthly basis. So if 1 month is positive because of your trend trading strategy, that positive profit is likely going to absorb the losses from your range trading strategy. And if your range trading strategy is having a positive month, then that profit is likely going to absorb the losses from your range trading strategy, because this is what it does. This is the way it was designed to take advantage of it. Okay, so when you use this type of trading strategies which complement each other, that's going to increase your likelihood of having positive months consistently. But does that mean that the profit is going to be stable like a regular salary from a regular job? Obviously that's not going to be the case, because I told you that with trading, the income from trading is not linear, it's not stable like that. There are months where you're going to have high profits, months where you're going to struggle to have profits, and there are months where things are just going sideways and whatnot. So this is just the harsh reality of trading that you need to accept. Okay, and the reason why I'm pounding on this is because a lot of traders, myself included, when we got involved with trading in the first place, we were actually told, maybe based on unethical marketing by a lot of the traders or gurus that we came across, or whatever the case might be, that we're going to be making X amount per day or X amount per month. Okay, and because of that, we thought trading was this gateway to riches that, we were just finding out and people just didn't know. So if we were able to crack the code, by crack the code, I mean learn trading the way, they tell us that they're going to teach us after they sell us something, then, we're going to be just sitting on the beach and just watching the money roll in. But that's far from the truth. This does not mean that you're not going to be making money from trading, but it means that you should not be naive into thinking that that money is going to be steady on a month-by-month basis. But this is not even a problem. The reason why I say this is not a problem is, just imagine that you're trading something like, with the advent of prop firms and access to capital that that didn't exist a couple of years back. Just imagine that you're able to max out on a couple of prop firms, for example, okay, or get some private investors, whatever the case might be. First and foremost, you need to acquire the skill of trading. If you're a profitable trader, capital is going to find you. One way or the other, capital is going to find you. And so let's assume that you've been able to acquire the skill. You've worked hard, you've sweated, you've toiled, you've done all of the things you need to do to become a profitable trader. And finally, you're profitable. And then, for whatever reason, you're able to raise capital. Now, let's assume that you're able to control, let's say, about $1 million under your asset as AUM, asset under management. Okay? Now, in this case, let's assume that you're trading with a trading strategy which gives you an average monthly profit. Let's say you're using this method that I just showed you. So you're trading with strategies that complement each other, but then when you combine them into one portfolio, on average, remember, we're saying on average because there are months where you're going to have profits that are going to exceed this number, and there are months where you're going to have profits which are likely going to fall short of this number. But on average, when all is said and done, this is what the profit is on average. Okay, so let's assume that you've created a portfolio of trading strategies which complement each other, and on average they bring you an average monthly return of something like 1%. So assuming you're trading with a couple of prop firms and you've maxed out, you're max allocated, so you have like $1 million asset under management, and you're making on average 1% per month. At the end of the year, Let's even assume that there are a couple of months where, you are not profitable. Let's say 3 out of those 12 months in a year, you are not profitable. And so, you're only profitable for 9 months. But then at the end of the year, you manage to get out of the markets with a profit of around 10%. 10% of $1 million is actually around $100,000. Now, $100,000, I don't know about you, but this is more than the average salary in the United States for a year. So if you're able to acquire such kind of results, okay, this is actually more than enough for you to go on to trade for a living. But what I'm saying is, because of the nature of trading, there are months where you're going to be in drawdown. There are months where you're not going to be in profit. And if you're relying on trading 100% to pay for your groceries, to pay for your bills, to pay for your children's school fees or your rent or all of those things, then you're going to be in a tough spot when those losing months come. And I've been trading for years, and I'm not going to, bold-faced lie at you that, it's only going to be 1 or 2 months that you're going to be, in drawdown. Let me tell you, there are strategies that I trade with, which are very good trading strategies, but they've had months where, a losing streak of like 3 to 4 months or even 5 months. Okay, so this is not uncommon. But they also have months where they make up, a huge amount of the profits that those losing months were bleeding out, okay, within maybe just 1 or 2 months when the market conditions started favoring them. So the wise thing to do in this business is, if you have a job, don't quit yet until you have an emergency fund. The reason why I want you to keep that job is because the money that you're going to make from that job is going to help you to take care of your expenses, your month-to-month expenses. And because of that, this, knowing that the money to pay for your bills is sorted, is going to take a huge amount of pressure off of your trading and make trading much more enjoyable, much more easier for you. And if you are maxed out with a lot of those prop firms or investors or private investors or all of those things, then you're going to be concentrating on trading. And instead of looking at trading as something that will give you money, every single month, you might look at it as an investment where you're going to be just approaching it from an annual mindset. So for example, let's say you're trading on an annual basis, and then at the end of the year, you make all of these profits. And then you withdraw that, for example, that $100,000 into your personal account, or into your, not even your personal account. I wouldn't even advise you to use all of those profits to fund your personal account. Maybe split it into 3 or 4 ways. Financial literacy is going to help you a lot here. So however you decide to do it, just save a huge amount of that money and then reinvest some of them, max out with other prop firms. And maybe if the first year you made a 10% profit in a year, with a $1 million asset under management, by the next year, have a goal of maxing out with a couple of other prop firms and getting $3 or $4 million as asset under management. And if you're able to consistently make that 10%, guess what? In the first year, 10% was like of 1 million was like $100,000. By the couple of when you max out with a couple of prop firms other than the ones you have accounts with, then if you made that same 10% for the next year and you're funded 3 to 4 million, that would be like easily 300 or 400,000. So you see, by that point, the income from your trading is actually making sense. And you would have stashed enough savings to fall back on, so that even if you have a rough patch of like 3, 4, or 5 months that you're not making money from trading, you're not worried because you have more than enough to take care of your day-to-day needs or your whatever expenses you might have. So at that point, you can decide to leave your job if you want to, if that's what you want, and go on trading full time. But for you to do that now, when things are a bit shaky and you don't have all of those, cushion and all of that, that's not going to be a smart decision, okay? So to quickly recap what we covered in today's class, the 2 secrets, okay? The first one is the fact that a lot of traders, especially ones who are new to this business, they don't know that the harsh reality of trading is the profits you're going to be making from the market is not like a stable monthly salary from a regular job. With a stable monthly salary from a regular job, if you do what you're expected to do, you're going to get a steady paycheck, okay? But with trading, you could do the exact same thing you're expected to do. Follow your trading strategy, follow your trading plan, do what you're expected to do, and still have a losing month because of no fault of your own. Why? Because the strategy might just be having a losing streak, okay? So you should be okay with that. You should know that it's not uncommon for you to be in profit, with 1 month of trading, and then the next month be in drawdown, and then the next month be at break even, and then the month after that making, extraordinary amount of profits. It's just normal. In the trading field, this is normal, There's nothing new about this. And the second secret is the fact that since these trading strategies, if you're trading only one trading strategy, like a trend trading strategy, for example, when the market is trending, that strategy is going to give you a lot of profits most times, and your losses are going to be, kept to a bare minimum. But then when the market stops trending and it starts consolidating or ranging, that strategy is going to struggle to give you the same results it gave you when the market was trending. And so the second secret is to trade with strategies which complement each other, so that when one strategy is finding it difficult to extract profit from the market, the other one which complements it is going to be doing just that, and vice versa. As a result of this, when one strategy is struggling, the other is going to be making enough money for, and minimizing your drawdown, minimizing the effects of those losing months that you're inevitably going to come across when you embark on this trading journey. Okay? So with that out of the way, this pretty much brings us to the end of this week's of the ITU edition of the ITU Forex class. And before we wrap up, I would like to use this opportunity to advise you guys to check our list of ITU Forex bots, which are EAs and expert advisors, in essence, robots, which are designed to help you trade the markets and place trades for you, low risk, high probability trades, do the risk management, do everything on autopilot. So once you follow our recommendations to set everything up on your VPS, you could be out there, doing what doing your regular 9 to 5, which is part of the thing we just talked about now. And then the bot is going to be trading for you on your behalf without you needing to be glued in front of your screen, taking those trades and doing all of this, okay? So if you're interested, please feel free to reach out to us in the comment section or on any of our social handles, and then we'll be more than happy to assist you set everything up step by step. And with that out of the way, thank you very much for taking time out of your busy schedule to attend this class. I look forward to seeing you guys in next week's edition of the class. Have a wonderful rest of your week, and cheers and God bless you. Go out there and crush the markets, okay?